Hello everyone, welcome to the Ichimoku charts.com daily analysis for gold for Monday, August 5th, 2013. Well, a change of trend today, and this candle that we're analysing is the second last candle here. That final candle, that small candle, is still currently developing. But on this current candle that has finished developing, we have seen the market make a higher high and a higher low. And therefore we have a change of trend to the upside. Prior to that, we had the market trading down with a series of lower highs and lower lows, and today's trading we have a spinning top type candle suggesting indecision in the market. It is a black body candle, so it suggests that the momentum has swung back to the sellers in net terms. It was with the buyers in a minor way for the previous day's trading, and today back to the sellers, but not terribly significant. It is still quite a small body. The body, however, is slightly larger than we have seen in the last couple of weeks. So there is a suggestion that we could see the market trade lower, but some very strong barriers to the market where it's trading at the moment. We have seen the sellers take control from the buyers once again for the previous day's trading. We saw the market trending down. We had this small white body candle and the market closing up towards the high, with the buyers closing with control. Today we've seen that change of trend. The buyers were strong enough to take out the previous high, but the sellers have taken control, and this does suggest that there's a possibility of the trend changing back to the downside today. So combined with the change of sentiment in this market on this uptrend, does suggest a lot of indecision in this market, and when we consider where the market's trading, it's little wonder that that's happening. Now, in terms of a pattern that we were following in this market, it was a wedge type pattern that we were looking for here, and for the previous day's trading we saw the market test outside of the pattern but fail to close outside of that pattern. That really does negate the pattern. The failure to close fails to confirm the pattern, and I suggest that we really do need to disregard that pattern now. It's no longer in existence. It's not a wedge, and if we take this area at the bottom barrier, move it out here, it may form some sort of a triangle pattern, an inverse triangle, but really not a pattern that we really want to be looking at. I suggest that this previous pattern that we had with this wedge type pattern is really now null and void. Now, in terms of the Fibonacci extension, and now that the market is trending up, we're examining the relationship of the first time frame uptrend to the previous time the market was trending up, and here we've seen the market testing up above the 100% level and the 78.6% level, and being strongly rejected from that area, suggesting that there is a very good possibility of this trend changing back to the downside. In terms of the Fibonacci retracement, we're examining the relationship of the current first time frame uptrend to the previous time the market was trending down, and here we've seen the market test to the 61.8% level and being rejected from there, failing to close above the 50% and the 38.2%. It does suggest very strong price rejection, and does suggest that there is potential for a change of trend in the first time frame to the downside. Now, in terms of Ichimoku, we have a neutral market in the long-term time frame by trading within the cloud, and that suggests that there has been a change of sentiment in this market. Here previously we saw the market trading down below the cloud for quite some time, and now the market is trading within the cloud with the market changing to neutral. Whether that will be maintained depends on the important support around the 1300 level and just below, extending down to the bottom of the cloud. It should be very, very solid support down around the 1290 area roughly as well. And as we're watching this market trade live now here, this current candle, it is now testing down below the 1300 level in a bearish manner, and does suggest at the moment that we could test down to around that 1290 level. In terms of the Kijun-sen, the market is still trading above the Kijun-sen, and that gives us a bullish market in the medium term time frame, and we have to disregard this last part where it's ticking up because of this current candle. As it's developing, it will potentially change, but as of the close of trading today, it was pointing flat. and price action was being attracted back towards that flat Kijun-sen, which seems to happen quite often. So whilst that's still flat, there is a possibility that we could see this market to continue to come off. But as I've mentioned, the area around 1300 and just below down to about 1290 is very important support. In terms of the Tenkan-sen, the market is trading down below the Tenkan-sen, and it has been for the previous 3 trading days, and suggests that we have had a change of sentiment in that fast-term time frame with a bearish market in the short-term time frame. Whilst the market was previously trading strongly above that Tenkan-sen, giving us a bullish market, and now for the past 3 consecutive trading days the market has been finding resistance around that Tenkan-sen, and it will or it has the potential to hold as resistance once again. It is coinciding now with that area around 1309, and that may be a barrier to this market today if it is going to trade up to higher levels as well. So overall we have a market that isn't a very good trading market. We have solid support below around this 1300 round number, and then extending roughly down to about the 1290 area, but solid resistance overhead extending up from the area around the Tenkan-sen up to about the 1329 and just above to the top of the cloud.